everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 29th of September 2017, and the markets are closed for the month. The S&P 500 did gain 1.5%. Don't forget it paid a dividend too, so it was actually higher than that. Nasdaq lost a little bit of ground, but the Russell 2000 really took off, and those biotechs continue to do great, up 30% this year. So let's take a look at the charts and make some sense of it. If you're going to be in San Diego this weekend, hope to see you at the Trade Ideas event. If not, make sure you look at alphatrends.net to get the link to watch that webinar on Sunday afternoon that I'll be doing, but all day it'll be a great event. So go to alphatrends.net and find the link there. So the S&P 500, we got back above that 5-day moving average with a gap on Tuesday. It pulled back and then tested the volume weighted average price for the week, as well as the volume weighted average price since the Fed right here. You can see those two kind of came together along with that 5-day moving average, and we took off from there. So we continue to be in a bull market. Obviously, anyone who argues that is upside down and losing money pretty profusely, especially if you were short the Russell 2000. I spoke numerous times about the propensity of this market to break out and fail, and that we were not going to short it unless there was actual evidence. So when we look at a 30-minute time frame, for instance, you can see that since the beginning of the month, pretty much, the Russell 2000 has been riding this rising 5-day moving average. And when we have a rising 5-day moving average, the intermediate term trend is innocent till proven guilty. So this week we saw it break out nicely. It pulled back slightly, and then it got back above that volume weighted average price on Wednesday and really took off from there, and that provided the support as well. So next week, as far as the Russell 2000 goes, we've had a heck of a run. It's expended a lot of energy getting to where it is, but that doesn't mean it has to pull back. What we'll be looking for is if there are pullbacks. If you're a super aggressive trader, maybe you want to get short, but otherwise we would expect something like this to happen. That is, higher highs and higher lows. People will tell you that, well, the volume was light the last 2 days, but the price is higher, and only price pays, as we know. The Nasdaq lost a slight bit of ground for the month, but here we can see that we're back above the 50-day moving average after spending 2 days below it, and we continue to be in a major uptrend. The direction of the 50-day moving average, as I always say, is more important than a couple closes below it. So we're innocent till proven guilty in the Nasdaq as well. We broke back above that 5-day moving average, came back and tested it. That test also came at the highs from the prior couple days. So now we have this market, the Nasdaq that is, in a back up towards the mid part of this recent range, but no reason to think it can't continue to move higher into all-time high territory. Semiconductors are certainly leading the way, and this group found support exactly where we wanted to see it find support, that is at the prior resistance and at the rising 20-day moving average. So you've got to look at this market and say it's doing what it's supposed to do, that the pullbacks are shallow, and we get cautious while we're below a declining 5-day moving average. But if you're going to be short, you've got to be very quick in a bull market, and there's really no reason to be short unless you're just of course looking for scalps. Anyways, that's going to do it for me. Very quick wrap up this week. I've got other things to do, and I'll be traveling later, so thanks for tuning in, and I'll talk to you next week.